Hey everybody, we are here with Jason Shapiro. I followed his work for a while. I really and I found out about him from Market Wizards, started reading the Market Wizards book. There's a bunch of interesting stuff that he was kind of putting out there. And then I really like looked at his strategy and I was like, damn, there's a lot of similarities. I learned a lot from, Larry Williams. And then Jason kind of has a different way of looking at it as well. He also has a magnificent first name as well. So, if I say so myself. So, hey, Jason, how are you doing today?
Good, man. How are you?
Good, good. And so, I my subscribers continue to, ask because I'll post your videos because I love the way you look at markets. You have a way of understanding like there's a difference between prediction and trading. There's a difference between thinking what's going to happen in the future and so on. There's so many people in the markets that are constantly trying to predict and talk about this is going to happen or that's going to happen. I've really loved your videos lately about, the rally that has happened and how everybody was on one side of it. Now people are kind of getting on the other side of it, but you've really kind of diced that up in a great way. So I wanted to talk about, at the beginning of this rally that's continued and continued to roll over tons of people, especially from the fundamental side who say that it's impossible. What were you seeing near the bottoms? What kind of got you to be more bullish? And what made you kind of stay on that side for a while? I know you've kind of started to put on some shorts recently, but why did you stay on that side for so long? And what were you seeing?
The same thing really that I see when I'm getting along anything, which is massive bearishness,
Mhm.
massive short open interest, and nobody thinking that there could be anything but that happening. Uh, so those are the kind of people that I essentially like to make markets to. So if they all want to sell, then I'm happy to buy it from them, and when they all want to buy, then I'll be happy to sell it to them.
Yeah, no, I'm really with you on that because I think that in markets there's this ability for people to really think of, it's fun to predict. Everybody likes to, human beings like to think they know the future, but in markets, like I don't think anybody really knows shit. I don't know whatever whoever you're looking at, whatever guru you're talking about, watching TV, like it's all bullshit. What is reality is the price action, what positioning is happening, what's going on in the markets. That's telling us the truth more than anything else. And so you're looking at that, you're seeing massive bearishness, not to mention at that point, everybody I had clients hitting me up telling me, for the fun that, S&P is going to get cut in half. I started to talk about, October, where the bottom started to happen. We started to get this massive buy signal in everything. There's positioning was so lopsided at that point. Nobody thought the market was going up. And not to mention coming into this year, you also had what was left over of that, which is psychological. And so you had the psychological warfare in a sense where you had the market moving up, but so many people were burnt last year in 2022 that they continued to kind of flip to very bearish positions the second anything happened. And most of the time when that happens, you see these very shallow pullbacks and so on. So, February we had the banking thing that happens. You were still kind of on the side that this had higher to go, seeing the same thing around that time, I assume.
Oh yeah. I
Yeah.
mean, the market told you louder than I told you. We had the banking thing, and what the market went down for about what 2 days.
Yeah, yeah. About
So
two
I
two
mean, if the
days,
market
and
wanted to
then
go, if the market wanted to go down, that was the perfect time for it to go down, and it didn't. So it's telling you
so
pretty loud and clear, I think, at that point, what's going to go on.
so what all do you look at? Do you look? I know you look at COT reports, obviously. Do you look at any other sentiment indexes?
I look at them all, but the COT is the one that I trust the most because it's an actual positioning data as opposed to just like a survey or that type of stuff. The positioning is more important to me than just some general survey. People say they're doing something, but what are they actually doing is the real question we're trying to find.
Yeah, and that's what I love about what you talked about in Market Wizards, which you talk about on your, you have a great program that you do for your own newsletter where you teach traders how to do things, and you have great YouTube stuff, all types of stuff where it talks basically about this constant idea of the COT reports And I think in general, like when you start trading, I think people don't like to put a lot of weight on it. They see, for example, you'll see the COT reports start to go up. They'll think that's something like a buy signal, and they'll start to like, get out of a position, get into a position based on this, and it's not really a, oh, it's just happening this way. What are the things you look for in a COT report to give you these buy signals? Do you look for extremes? Are you looking for open interest? What do you usually look for?
Yeah, because my style of trading is I'm sort of a turn picker.
Hmm.
So therefore I'm looking for massive extremes. Markets only turn, they don't turn every day,. They only turn once,
Hmm.
So I'm looking for massive extremes on the in the positioning of the COT. So I'm looking for like the speculator positioning, let's say, to be massively short for me to buy, and obviously massively long for me to start to look to sell.
And you have, you still have a fund, correct?
I do.
Yeah, so you have a fund, so you're sitting there looking at the other speculators that have funds. That's the thing that I find funny sometimes. If you're just going online and you're looking at basically people on Twitter or people wherever, and they're talking about COT reports or they're talking about smart money. Sometimes people talk about smart money and they're talking about the hedge funds. That's not normally what we would think as smart money. But what do you think of as smart money and dumb money in the markets?
I think it's all dumb money.
I do too.
I mean, smart money, dumb money, hedge funds. I always say the only difference between a retail trader and a hedge fund manager is job title.
Yep.
That's really it. Somebody happened to get the job. They went to whatever University of Pennsylvania or something and knew somebody that worked at hedge fund, and they got the job. But
Yep.
there's no difference. And I've worked at hedge funds and I've worked at big hedge funds. And I can tell you there's no difference between them and some retail trader. Really, none.
Yeah, I mean, for myself, I've done the same thing. I've kind of been with certain hedge funds and talked to certain people, and it's kind of funny. Like people don't really like. I mean, we had a guy at a fund that literally was, selling call options naked on stuff all the time, and he was blowing up money. But he was the owner, so nobody could tell him anything. And then he hired his son, and his son's blowing up money, and it's like they had this like play account side and everybody else had, and they would be crazy on us about our returns all the time. So it was like, yeah, this one side over here where we're trying to trade and make money, this other side that's losing whatever we're making, so it doesn't really matter anyways.
All right,
You
they
know,
needed you guys to make money to cover all
yeah,
their losses.
exactly. So they're riding our ass like crazy. I'm getting phone call. I'm getting stressed. I ended up leaving because I was like, this is so stressful that like this is insane. Every single if you had like a down week, you're getting phone calls and you're like, that's not trading. Like you're gonna have down weeks, you're gonna have down months, you're gonna have down periods. Like there's no you can't go
Fact.
straight up every single day. And so like because of the amount of stress on this side and also the fact that they were borrowing so heavily, and putting so much leverage on everything at the same time on what they were doing, it's like, man, but that lesson really taught me, like, when you're looking at those speculators, when you're looking at that, whatever you want to call it, smart money, dumb money, when you're looking at the speculators in general, they're doing really dumb things most of the time. And when you're looking at, the COT reports, we're really looking for me at least, I look for extreme. Hey, so, I guess the best question is, when did you start to find that the COT report would be something you could use to make money? Why did you start to look at COT data? Did somebody help you get into it? Was it something you found on your own?
Yeah, always kind of had this contrarian bent to my trading. And I remember in the second half of '99, we were in such a bubble, and everybody around me was talking about how they were making all this money on these tech stocks, these internet stocks. And it was like classic kind of shoe shine boy giving stock tips type of time. And so I was shorting, trying to be Mr. Contrarian. And, the NASDAQ in the second half of '99 went up like 40 or 50%, right? So I was looking for ways to try to avoid that, obviously. Um, and then I came across the Commitment to Traders report and noticed that if you really waited until that showed massive crowding, you
Hmm.
wouldn't have gotten short that NASDAQ until like early 2000.
Mm-hmm.
And that really struck a chord with me because I was like, I always say there's a fine line between being contrarian and just being stupid. And how do you, sort of get around that line, or
Yeah.
don't cross that line, right? And so the answer for me is, I look at positioning. When people talk about contrarian, I am talking about contrarian positioning. A
Mm-hmm.
lot of people talk contrarian, they're trying to be contrarian price, right? Hey, this has gone up a lot, so let's short it, right? Which is
Mm-hmm.
just, to me, the biggest mistake there is. So I'm trying to be contrarian positioning, so that given that the commitments to traders was a positioning, given that it really would have prevented me from shorting anything until January of 2000. That meant a lot to me. And from there, I just started looking at the data and working with it and seeing what I could get out of it.
Nice. No, I love that. I mean, that's similar to me. I think it's a when you see price action the way you do, and you realize like that's the way you get paid. Like we don't get paid any other way. We get paid when the price goes up or and you're long, and we get paid when the price goes down and you're short. When you're looking at this and you're looking at all these COT reports and you see that you have this one thing that has kind of told you, hey, wait a second. Because that's a thing that to me, I think that's the importance of back testing, being systematic, figuring out all this stuff for me was just to keep me out of the fucking market at bad times, and just having like a yellow light indicator. Sometimes there's nothing to do. And the COT report really is that thing that can kind of put in front of you, hey, there's nothing to do right now. You don't if you are long, ride the trend, but wait until we hit this certain point and then start looking for an entry. That doesn't mean just enter, but that means then start looking for an entry. So then, you take that part and you integrate that in your system. Before that, were you looking at you call it what do you call it? News event? Um,
News failure.
yeah, news failure. When were you doing news failures before that or after that? Did that kind of
I
come
was
together?
doing I was doing that.
Hmm.
I was definitely doing that. Just to go back a second, I think the point that you make is very important. The COT data has its good and it's bad, just like any other data set, right? It is
Hmm.
not perfect by any means. I always say there's plenty of markets. I'm picking market turns. There's plenty of market turns that I miss because the COT is not set up for me to do something. There's
Hmm.
plenty of times the COT is set up to do something and the market doesn't turn, right? And therefore I have losing trades, right? All these things happen. But what I find, one of the major things that COT does, I find, is keep me out of trouble, right? Which is,
Hmm.
like you say, a big part of this. Making money is great. Not losing money is just as important, because if you're just making back what you lost, then you're not getting anywhere, obviously, right?
Yeah.
So I think that one important thing that this data does for me is keep me out of a lot of things. So just to sort of talk about that point you made. As far as the news failure stuff goes, yes, this is what sort of is level 2, I think,
Hmm.
for me. It's not just, hey, everybody's long, I'm going to get short. Everyone on
Yeah.
CT is long, I'm going to get short. I need some kind of market confirmation before I do anything. And I think that that's important for any trading that you're doing, quite frankly, right? I don't care what you
Absolutely.
think. I think that, whatever, Disney is a buy here. Okay. That's great that you think that. Okay. But you might as well let the market confirm it before you do anything about it, right? And I don't care how you define that. If you're a trend follower, you define it by, okay, it's gone through whatever the 20-day moving average or the 50-day has crossed the 200-day, whatever your definition is, right?
Hmm.
I think that's an important concept for people to hold is the market should confirm what you want to do before you do it. So that's really
Hmm.
what the news failure is thing for me. I see that the commitments of traders shows everybody's super long. I want to get short,
Hmm.
but I'm not going to get short until there's a news failure event, which means the market's going up theoretically because of this reason, right? This is what
Yes.
everybody that's in that market, whatever the market is paying attention to. So I'm looking for a piece of news to confirm that. So here's more news. Let's take the low of the stock market because that's the easiest one in October. The
Yeah.
market theoretically was going down all year last year because the CPI kept coming out higher and the Fed was going to have to keep raising rates. Well, the day the market hit its low in October, the CPI came out higher again. not just higher, but higher than expectations, right?
Mhm.
So that is fuel for the bear. The market should go down on that, right? And it didn't. It went down and then it closed up on the day that day.
Yes.
And that to me is news failure. Should have gone down, didn't. So, and I'm starting with the fact that everybody's short already, which to me is why it didn't go down, right?
Yep.
This is all driven by positioning. But
Mhm.
bottom line is totally bearish news. Market should go down. It didn't. So that's where I'll buy it. A, they're short. B, the market confirms it with this news failure event, and that's where I'll make the trade.
No, I love that. And that's the best example, and it's the ultimate example because it was the point when everybody was going, "Oh my God." I had clients, I literally was on the phone with clients that morning, wondering what to do with their portfolios. Like they have retirement portfolios that aren't with me, and they were like, maybe I should sell everything. I had one client calling me that day. I think I'm going to get rid of everything. This is going to go get cut in half, and they're all freaking out. And that's really, to me, when I hear that, I'm like, that's what all the market participants are doing right now. So at some point, who's left to sell? And that's really the end of it. And like you said, like you got, now you're talking two things. And like we keep the theme of what we're talking about is you have two things now. You have the COT reports, keeps you from just going in at some random point. You're looking for extremes. Then you see these extremes or buy signals, however you put that together, and then you don't buy still. You're waiting for this news failure event. And CPI comes in. It's been getting higher and higher all year. If it does go higher, but it doesn't take the market down this time. Now, that's the really important thing to say here because you're talking about a major market bottom getting figured out by using COT data, news failure events. And once again, it's like you said, if you want to do that in another way, you're waiting for confirmation after this. It to me, if you just looked at the price action, we're like, okay, COT report is this way, but then we had a false breakdown and it reversed higher. However you want to look at it, that doesn't matter to me. But waiting for that confirmation and the market, Jason said that was really important. The market confirmed what he was looking at. The market confirmed what he was seeing. That's when you enter the position, and that's a really really powerful thing to say there. And
Yeah,
so
I mean, I think it's super important, you know.
yeah,
Yeah.
the
Um,
most.
yes, and it's like you say, the guy's calling you and he wants to sell everything. This is where people's egos get into play here. This whole thing, if you really break it down, what I do to the most simple idea, right? The
Mhm.
most simple idea to me is that 95 or more percent of people that try to trade the market lose money, right?
Mhm.
So if I can go opposite of those 95% of the people, then I can capture the money that they're losing, right? It's really
Yes,
just that simple, right? Um, in theory, it's that simple, right?
in theory.
And people just refuse to believe that anybody else is, oh, the market's going to crash. Well, if you're thinking that
Mhm.
and everybody else is thinking that, then where is the return in that?
Mhm.
If we know that you and everybody else either underperforms the market if you're long only or just loses money if you're a trader, then why can't you see that that's probably not going to work, right? And it's
Yes.
because their ego gets involved. So I try to very hard to just take my ego out of the whole thing. I don't care. I always tell people I'm not trying to be smart, I'm just
Mhm.
trying to make money. If
Yeah.
I want to be smart, I'll go read a physics book or something like
Mhm.
that. You know what I mean? Or whatever, right? Um, this is not about being smarter than the market because you're never going to be smarter than the market. All
Yes.
right. Just accept that. You have to accept that. All right. And I say it often, you may actually be the single smartest person in the entire market. And if you want to believe that you are, God bless you. And maybe and maybe you are. No,
Yeah.
maybe you are the single smartest person. But understand that you have to be smarter than all of the people in the market combined
Mhm.
in order to make that work for you. And there's no possible way that you're smarter than, however many people are involved in the market combined, right? A billion people combined. You're not smarter than that. It's impossible. So trying to be the smart person and make money by being smart and seeing the future is a ridiculous waste of time. And it's going to be a waste of money over time. And people have the problem where they might get something right. Oh, I think that the employment report is going to be stronger than expected, and therefore I think that and then that happens.
Yeah.
And then all of a sudden you think, oh, you see, look how smart I am. But that's not right.
Yeah,
I've done it on
50-50
video.
shot there.
I can flip a coin. You know what I
Yep.
mean? Hey, heads. It's heads. Oh, look at me. I called heads and it was heads. I'm a genius, right? It's obvious to see in that situation how ridiculous that is.
Yeah.
In these other situations, in the market and stuff. And there's two levels of problems with that, because you could flip the coin and get the employment or whatever number you're looking at,
Mm.
CPI, whatever, right. Does that mean that the market is going to then do what it's supposed to do? The market very often does not do what it is theoretically supposed to do. So you have
Yes.
two levels of problems with that whole, process, right? So I think that's what people have to come around to, and this is what we talk about on my newsletter and on my Discord and all this stuff. Is this is what I
Mm.
consistently try to talk about. People come on there and they want me to tell them what to trade.
Yep.
Like, I'm not here to tell you what to trade. I show you how I trade. I
Yep.
show you my trades, but I
Hmm.
don't think it's a good idea for you to mimic my trades, first of all, which is a whole nother conversation. But I'm
Hmm.
like, forget about that stuff. If you're coming on here, right, it should be about trying to learn these type of lessons.
Yes.
This is how you're going to make money. Well, I'm trying to, I always say, teach people to fish rather than give
Hmm.
them fish, right?
Yes.
And these are the lessons that are most important, right? Understanding that you're not smarter than everybody in the world is lesson number one. Understanding that in the market you are not going to make money over time by trying to be smarter than everybody else.
Hmm.
It's all about process. It's all about risk management. It's all about discipline. The rest
Yes.
is flip a coin for all I care on how you
Yep.
decide to trade. But that's what this is all about. And until you understand that, it's just, I can tell you, it's just not going to happen for you. I've been doing this for 35 years and I've done it a
Hmm.
bunch of different ways. And I've worked with many, many, many different traders and I've observed and watched, right? Um, and I have hundreds of traders on this Discord page now who
Hmm.
also talk about their trade. Even besides all me talking about all this, they still like to get on there and talk about, hey, this is the trade I'm making and this is
I
that,
know. That's so
and
funny.
you see the same behavioral patterns, and that's normal because we are
Hmm.
all
We're human.
human beings. So we're
Hmm.
all going to have very similar behavioral patterns. As much as you want to think you're the special one, okay?
Hmm.
Um, Odds are you're not.
Yeah.
So, especially over time, right? So
Hmm.
I think these are the most important things by far when it comes to trading. Not where I think the market's going to go because I was in Market Wizards. It's
Yeah.
irrelevant. You know what I mean? It's irrelevant. You know, I have
Yeah.
no idea where the market's going to go ever, right?
Yep.
I just do a system that I believe gives me odds. That's all
Hmm.
it is. It just gives me odds, right?
Yes.
And therefore, I have to consistently, in a very disciplined way, follow the system, take my loss, ride my gains, all the classic things, right? Because that's
Yep.
the odds I'm playing, right?
Yep.
I don't have the benefit even of my trades working more than 50% of the time. My trades
Hmm.
work less than 50% of the time.
Yep.
I have to
Usually.
I have to cut my losses and ride
Hmm.
my gains
Hmm.
because that's the only way I'm going to get paid, right? Um, so
And that's normal. Most traders, that's where they're at. Nobody, people like look at it and they go, "Oh, I want to do that." And even if you come up with a system, there's and I did this the other day on my channel where I talked about I back tested certain systems and sent like, a very short-term high win rate system. It's the S&P, actually it's today, 4 days down, sell a put spread, whatever you want to do. 4 days down, put spread, you make a certain amount of money, but one loss in that system wipes away 10 wins. So it doesn't matter. So it's like if you're able to come up with a system that you understand that your win rate's under 50%, that's most of the time that's normal. But because of that, then you keep your risk management tight, and then you have one winner that pays for a few losers, and or even five losers. That's the best way to do it. You can't do this thing where people all the time everybody thinks they're going to be right. That's what they're looking for. They want to talk to you and me and anybody and go, okay, you're a trader, I need to know the secrets. And the secrets are not, what you just said, which really are the secrets. They're in their head. The secrets are, what are you picking today? And, I had subscribers ask me, when I said I was interviewing you, hey, what's he looking at here? What's he going to buy here? And it's like, no, that's not, I'm not going to bother him with those questions. Like
Yeah,
that's
I
not what
mean,
we're
and
getting
that's
at
why
here.
I do these
I can
videos.
tell you, sure. And you could tell me.
Right, but it means nothing.
Yeah, it means nothing.
Yeah.
And when people talk to me all the time, I'm like, what I want to do is I'm trying to help you create your own ideas, create your own systems, because you're not, I could post my systems on a wall. I've posted tons of back tests. I've never heard one person say I've been using your model, it's been great, or I've been using your model, it's shit. Like nobody's ever said that because nobody does. You're not going to follow that plan of somebody else's system. You have to come up with your own ideas, your system, and it has to fit you in many ways,
A
and
hundred percent fact. What you're
mhm.
saying is religion to me.
Yeah, exactly. It just has to fit you. And the same thing, you talked a little bit earlier in that about positioning and people being right and so on. The election was a great one for me. Like I'm not very like I have my own political beliefs, but I don't really have a side at all. Like I don't have any of that stuff. I stay the fuck away from it because it hurts my trading really.
Yes,
So
correct.
so if you're looking at the election in 2020, it was probably the best thing. I had a really good time around that time. And when the election before it was happening, and normally elections are the same shit every time. Everybody argues. The second, everybody's very bearish, everybody thinks it's the end of the world, and then the market goes up. And so that time I literally got pulled into a party with some friends and like a day before the election. And they were like, leave your phone at home. I'm not even kidding. They go, leave your phone at home. Come to this party. We're gonna be at, the shop or something. I go, okay. So I go and hang out with my friends, and these are good friends of mine. I'm not making fun of them. If any of you guys are watching this, I'm very sorry. I'm not making fun of you, but it's just important for trading. And so I'm sitting there at this party, and we're all having a conversation, and then all of a sudden it gets very quiet. Did you guys bring your phones? I go, no, I don't know what's going on. And they go, all right, the election's tomorrow. If Biden gets in, this is going to happen. If Trump gets in, this is going to, and every way it was like doomsday either way. And it was like, we got to escape to here. And I was just like, this is what people are on right now. Like, and like, I went home and like, I literally was like, oh my God, like, this is the opportunity of a lifetime. And once again, the analysts were all, saying that it was, if what do they say, if Biden got in by tech, by solar, by something, and if Trump gets in by energy, then Trump doesn't get in, energy goes through the moon. Like I have two of the best months of trading I've ever had in my life, and it was all based on just understanding that bit of psychology, that bit of understanding what positioning was. And that's really, to me, like really really important to trading, is just understanding that bit. And it's not about what I picked on that time. You could have pretty much threw a dart at a wall at that point. Everything was kind of going up. It wasn't me being a genius. It was just understanding that there's these opportunities that are built in by positioning. I think that's really important. And then having the uncorrelated return streams to kind of take advantage of it and not get blasted if it did go the other way.
100%.
Mm-hmm.
That's really that's what it is.
Mm-hmm.
That's what it is, And the uncorrelated return stream point I think is a very important one too. One of the many reasons why I beg people not to mimic my trading
Mm-hmm.
is I run a business. I manage money for some institutions.
Yeah.
The reason they give me money at the end of the day is not only because I'm so good looking,
Mm-hmm.
but it's also because, like why are they giving money to some dude sitting in his house in Rhode Island, wearing dead shirts, you know,
Mm-hmm.
they can give money to anybody. If they're looking for beta, they can give money to anybody, right? Big
Yeah.
institutions with a whole millions of people behind them. But my return streams are negatively correlated to just about everything else, right?
Yes.
So that's my business, right?
Mm-hmm.
And that's why people give me money. So I
Mm-hmm.
have to, that's my job, right? And clearly, if I'm buying what everyone's short and I'm shorting what everyone's long, I'm going to have negative return streams, right?
Mm-hmm.
I need positive returns with a negative correlation. And okay, I've given them that.
Mm-hmm.
But that doesn't necessarily mean that that's what your goal is,
Yes.
So to just follow me is silly. you know?
Yes.
Okay. And you say, oh, you say that, but your returns have been great. So I just want to get your returns. Okay. But my returns are provided to people who have a bunch of return streams in their portfolio
Yes.
and they need this negative correlation, right?
Mm-hmm.
That is maybe not what you need. So to do exactly what I'm doing is silly, but some of the lessons in what I'm doing and exactly what you're talking about, these lessons about, you know, positioning, these lessons about, market confirmation, lessons about discipline, these lessons about, you know, guessing the future is a stupid thing to do in this game,
Yes.
right?
Yes.
Take those lessons and let that help your trading.
Mm-hmm.
And if seeing my trades and what I do helps you to understand those lessons better, then great. And
Mm-hmm.
that's why I'm putting my trades on there so that you can watch me as I succeed and fail and see how I deal with that discipline wise. Hopefully that is what's helping you here. Not, oh, Jason's selling S&P here, so I'm going to sell because he was, that stuff is going to kill you. I
Yeah.
tell these guys again and again and again because
Mm-hmm.
I'll lose. You'll come and then you'll do my trade. I'll lose. You'll do another trade. I'll lose. You'll do another trade. I'll lose. You'll say this guy sucks. I got scammed. You
Yep.
won't do another trade, and then the next trade will make 10 times.
Yep.
And now I'm up 4%. You're down 3%, and
Yep.
now there's a 7% difference, and you're never going to catch that back, right?
Mm-hmm.
So it's such a bad thing. But I can tell you, people still do it. So as much as
Yeah.
I beg them not to.
There's nothing you can do, to change that, because I think that's part of me thinks it's just the journey as a trader. Like you start out, you think these guys are professionals, so therefore, because they're professionals, you will follow what they do, and if you just follow what they do, you'll be okay. And
Right.
really, like that's just not it, because this is such a psychological game over everything else. You can't I hunt for outliers. So my personality, it fits that. I used to be a professional bike rider. I've kind of a risk taker, like I understand, not that I'm risky with the money, but I have a good tolerance for hanging on to big moves, and not panicking, and kind of being steady in certain things. So my personality has been like very small positions, hold them. I'm okay with holding something for 2 years in the futures markets. Most people are not, like they're not gonna hold something like natural gas for a year, like, or something like that with a wide enough stop to make that happen. Also, they're not going to understand how small of a position that is compared to my portfolio. Like every single loss is just 1% of my entire portfolio. So you have to understand those things. And then number two, like you said, and this is an important point, when you are hired by other people, when I've worked for funds, I am not there to in my own portfolio, sometimes I'll have different trades and I even have different strategies I run. But when I'm hired by somebody and they want a trend following trader and somebody that's going to hunt for these big outliers to catch these big moves in commodities, currencies, whatever, they're hiring you to do that job. The market isn't always going to be conducive to that. Last year the market wasn't perfect for that type of trader. But the years before, sure, but it's going to be, your strategy is going to fit at certain times. You're going to drastically outperform someone like me. And then sometimes when the market's just raging and not stopping, my strategy might outperform you. And that's the point. Like, you need these uncorrelated return streams as a big hedge fund. But as an individual trader, maybe those drawdowns don't bother you as much. Maybe those flat periods don't bother you as much. That's okay. But what we're talking about, uncorrelated return streams, not to mention, we're talking about, you probably also have uncorrelated positions. You probably don't just trade the S&P. Like I know you don't for sure. I certainly trade, like I trade, because as a trend follower, I trade tons of products. So having all these things together, uncorrelated returns, uncorrelated positions, different types, different strategies, different time frames, all these things, they're important to kind of understand the differences in them as a trader.
Key to building wealth, man. Uncorrelated return streams.
Mm-hmm.
They talk about Ray Dalio. The guy's a
Mm-hmm.
multi-billionaire. His returns were pretty good for a while.
Yeah.
I know people that have worked there, and you see him now that he's sort of semi-retired. He comes out and he'll espouse these macro things, and he wrote a
Yeah.
book about these macro things. It's all bullshit. right?
Yes, it
All they
is.
had was they had 20 systems in there that all had that were uncorrelated to each other with positive return expectations. If you can get 10 things with positive return expectations and no correlation to each other, then what you do is you put your money in those things and you go to sleep for 30 years and you wake up and you're a billionaire. It's
Yes.
really that's what managing money is, right? And that's, like I say, why people give me money to manage, because I am producing this non-correlated return stream, which can be very hard to find, right?
Hmm.
I mean, trend following, to me, macro and trend following are one and the same. These guys
Hmm.
want to play like they're macros people,
Yeah.
and they build these whole macro stories, but they're just medium-term trend followers. That's all they're
Yeah.
doing, right? And you can tell me I'm wrong, but all you have to do is look at the returns, and
No,
the return the
you're right.
return streams don't lie, right?
Yes.
They're
Yeah.
like 90% correlated to trend followers.
Yeah.
So, you know,
We're all trading the same products. Like that's the
right.
thing at
So
the end of the
it's
day.
hard to find. It's hard to
Hmm.
find, you know, this
Hmm.
it's negative return stuff. So, like I say, that's what I do, and that's my business, and that's what
Yes.
puts food on my table.
Hmm.
But it might not be what puts food on your table, you know,
Yes.
and that's fine. You know,
Hmm.
I mean, everybody should do them. Not to mention the fact that, as you've mentioned before, you're not me, and I'm not you. I wouldn't
Hmm.
want to trade your thing, and you shouldn't want to trade my thing, because I trade what fits my personality. So therefore, I believe in it, right? I also trade what I
Yes.
built and tested and had other people test and went through it. So I can believe in it. You are not, the first time it loses money, you're not going to believe in what I'm doing, and you're going to
Nope.
abandon it, you know?
Yep.
So it's never going to work.
I enjoyed the way you put that, where you said, if you're trading you come onto my strategy and you trade this thing I'm trading three times and it loses, which is normal. Like, the people think like if you're 50-50 trading, you're gonna win one, lose one, win one. No, no, no. You're gonna lose four or five, you're gonna win four or five. Like that's usually how it goes. Like it's not just a win one, lose one, win one, lose one. So, that's a really great way to put that, because so many people get into this space and they follow somebody and they're like, oh my God, it's a scam. And it's like, maybe that year wasn't their year. Maybe that quarter wasn't their quarter, like you really don't know. And not to mention, I bet there are a lot of people like analysts. Like I think there's a difference between being an analyst and a trader. Traders have one personality type. I couldn't sit there and write about something and be wrong about it for very long. That's just not my personality. I don't think that makes money. But I know plenty of analysts who, when energy was in a shit show for God knows how long, since 2016, it just kind of was in a downtrend. Even before that, really, it peaked in 2008. And then recently it starts to move in an uptrend. And these people that I know were energy traders that whole time and being long all these individual energy stocks and getting hammered every single year, basically. Now they're talking about how amazing they are. And they're analysts and they're talking about, oh, my returns are great now. And it's like, I couldn't sit there and tell people to be long something for 10 plus years and then say I'm super right. Like I would have just been like, okay, well, I'm moving the fuck on, or I'm shorting energy or something, like there's no
I
way
heard
I
a
could sit
great.
there doing that.
There was a guy on my Discord gave us a great quote last week, or a couple weeks ago.
Yeah.
He's a broker, and I guess he brokes to hedge funds or whatever. And he was talking about how he was at dinner with a few of these guys, and he was like kids that came out of the Ivy League and were like in their mid-20s and
Yeah.
trading the markets, and they were getting like run over or whatever. They said, well, they literally said this to him. Well, guys like us who are smart, we're early all the time because we're so much smarter than other people that we see things before the market sees it.
Jesus
Okay,
Christ.
well, good luck with that. You know what I mean? Like this whole thing of we're early is like you're not early. That's
You're
just
wrong.
another word for you're wrong, dude.
Yeah.
You're wrong. Okay.
Yeah. And
So
that's it's fucking blows my mind when people say things like that, and it's the
even have
same.
something come out of somebody's mouth like that, first of all, is like, okay, dude, I'll fade you all day. Just the fact that you
Yeah.
think like that is scary to me, right?
Yeah.
Um,
Just so much smarter, like and it's Yeah, sometimes you're early and sometimes but that doesn't mean like I'm gonna sit there and be in a position early and say, oh, I was early. Like I was wrong. I took a loss on it. I'm gonna wait again, like I always talk about certain trades, some of my best trades, they come on the sixth signal, like that's okay too. But sitting there holding things because you're so wrong and you think you're so right, that's what
Yeah.
costs you everything. That'll blow you up quickly. That'll cost you everything over and over again. The positioning in those hedge funds and the people in those hedge funds, sometimes like you see that thing over and over again where they're so right, we're so wrong. Like there's that you and even like someone like me, I've had these conversations with other guys as well in the hedge fund industry, and you're having these talks about things like this, and you're like, okay, well, you've been talking about being long this for this long. Your fund is long this for this long. You never thought like, hey, I'll just get out of it. The greatest thing I think I'm seeing lately is like this NASDAQ thing, and maybe it's turned here. I don't know. But, I'll never know. But they've been short since October anyway. So like they've been short since the bottom. So who fucking cares? Like you've been wrong since the bottom. You're
Well,
holding it.
they're just early, man.
Yeah, they're like in a 40% rally. And it's like, what? I don't understand what you're getting at. What your ego's sitting here and telling you that you've got to be right. You've got
But
to be right.
especially those guys. My big theory does if you look at someone like that,
Mm-hmm.
right? So what did they do? They went to high school
Mm-hmm.
and they worked hard and they did very well.
Mm-hmm.
So they got rewarded for their hard work. So they went to Harvard,
Yep.
where they worked hard, did well, and got rewarded by getting hired by some big hedge fund, right?
Yep.
So in their mindset, that's how things work, right?
Mm-hmm.
And maybe in some parts of life, that is how things work, but not in this.
Not in
Okay,
this.
this is not how that works. And so therefore, you know, and that's why none of them outperform either. You know what I mean? Some of them make money
Mm-hmm.
because they get long and the market goes up, right?
Yeah.
They're always owning something. But if you look at their long short portfolios, they suck, and they
Yeah.
always have sucked.
Yeah.
You could do better. I've done this before, but they talk about all this money that gets allocated to long short, right?
Mm-hmm.
Um, and that's supposed to be a hedge and all that. I'm like, you know what? Take your money and put 50% of it in the S&P index fund and
Mm-hmm.
50% in cash.
Mm-hmm.
That outperforms long short over
Yes,
time.
it does. And
And you
it
don't have to
really
pay
does.
2 and 20 either,
Yep.
right? So it's
Mm-hmm.
all a humongous scam,
Mm-hmm. Yes.
which
No, it's
I
it's the
can't do
truth.
anything about, but that's just what it is. These people add no value. I always wondered why it became very clear, certainly by the turn of the century, by 2000, when you've had enough data on mutual funds,
Mm-hmm.
that some huge number, 98% of active mutual funds underperform the market.
Yes.
So why then, if you take these same people that are underperforming the market as long only guys and let them go long short, why would they outperform then? Like shorting is even harder than long, right? So
Yes.
like why would they outperform? Like why would you think that they could outperform then? It doesn't. The whole thing makes no sense to me. But I gave up a long time ago trying to change the world. I just sit
Yeah.
here and I just sit here and do what I do.
Yeah, and that's the thing about it. It's important to understand those facts. We can't change it. We can't do anything different, but it's important to understand because, if you're doing something with your own money, you can just understand that that's most of the time that strategy isn't going to be something that makes you money. Running a different type of strategy is possibly going to make you money. Finding that strategy and that fits you is the most important thing of all. But most importantly, what we're saying here, above all else, there is no way to make money just by thinking you're extremely right all the time. You'll make a couple percent on your portfolio, but you're better off buying and holding and walking away, or putting yourself into a diversified portfolio of some sort. Some garbage basically, but it's better than that. It will all perform better than that. And I think it's really cool to talk to somebody else who kind of thinks that way, because I think for me, I know like I was a good question to ask you is I've always been a contrarian, my whole life it's kind of been that way. As much as like sometimes I'm like, damn, like I wish I wasn't in this situation. So like, let's say my girl or somebody didn't hate this one thing that I like so much, like, or something like that. Are you a contrarian in like almost every sense of the way? I know I'm not talking about like, like you said earlier, you're not just talking about price action where, we're just shorting because the market's high. You're talking about just generally in life. Are you, kind of a contrarian in most ways?
Megan, this guy's asking me if I am a contrarian in other ways besides trading in life. That's my wife. So
Nice. That's perfect. Yeah, that's exactly what my girl would have said to as well. So perfect.
but I believe it's not just a game. You know what I mean?
Yeah.
It's also through observation as well. I believe so strongly that as soon as somebody says the words "I think," that their ego is involved, and as soon as their ego is involved, there's a good chance that they're making a bad decision. I believe
Yes.
so strongly in that
Hmm.
as soon as somebody says "I think," I'm automatically going to want to take the opposite side, not because I think they're stupid,
Hmm.
because I think that they're falling into a very typical behavioral bias that I have witnessed turns into the wrong decision over time. I'm not
Yes.
calling you, and people, of course, when I say that, will think, "Oh, well, you're telling me I'm stupid,"
Mhm.
which that's not what I'm doing.
No.
I'm saying that you're human is all I'm
Hmm.
saying, right? Which is hard to deny, right? And
Yeah.
human nature, as it is, has developed in a certain way and has had to develop certain defense mechanisms in order to survive the way that we have survived, right?
Hmm.
That's just how the wires are, and I think that the wires lead to that kind of stuff, right? And then it gets worse. Not everybody does this now, but then once they get wrong, like you say, they dig in, right? I'm not
Hmm.
wrong, I'm just early, I'm just temporarily
Yep.
wrong, remember?
Yep.
And that's how you blow out, right? In anything, be it trading or life or whatever, right?
Yeah.
um and look, I've fallen victim to. I was married once to my first wife for a lot longer than I ever should have been, and I knew from a very early stage that I should have cut loss on that shit.
Hmm.
But you dig in because you're like, I don't want to get divorced. I have a kid. I don't want to, leave the kid.
Yep.
I don't want my friends to think that I failed at marriage. I don't want my family. You for all the wrong reasons,
Hmm.
right? When in my gut, I knew I should have cut out of that inside of about the first year when I did it. And as it turned out, I ended up sitting there for 15 years of hell, right?
Yeah.
So that's just human nature,
Hmm.
But with trading, you can't do it. You shouldn't do it with anything, but with trading, there's P&L involved, so you will pay the price. You can justify away all
Hmm.
these other things in life. You can't justify away P&L because if you can't pay your bills because you lost your money, you can't pay your bills, right?
Yes.
So
No,
that's
that's
why I'm
perfect.
that's why I'm so like that. It's because I,
Hmm.
I believe in with every ounce of my being that that's the case. And in particular, now it's one thing when it's one person,
Hmm.
but when everybody's doing it and it becomes huge consensus,
Hmm.
you're never going to catch me ever, ever agreeing with that, ever.
Same. And that's I think that's I grew up reading, on public relations and group psychology and so on, and the Milgram experiments where basically they throw the guy in a doctor's uniform, and he's able to tell he's not even a doctor, but he's able to tell people to continue to shock people, like read about Nazi Germany, whatever. Like I read about all that stuff growing up, and learning that turns you into like a person who's like, well, what is manipulating me today? And so like even when I make a decision that like, once in a great while I'll think to nowadays it's more thinking to and I don't, but you'll think to override your system or do something a little bit differently in your trading. And most of the time I'll ask, what's wrong with me today? Like I'll ask myself that a lot because there's some days it's just me fighting me. I don't need to fight me most of the time. So I just had to ask myself, what the fuck am I doing here? Why am I doing this? This doesn't even make sense, but I'm doing this for some ego related reason. And everything, like you
I have
said.
this thing hanging up on my wall right here. Got 1, 2, 3, 4, 5, 6, 7, 8, 9, 11 behavioral biases.
Hmm.
And every time I do something like that, I look and I go, okay, which one of these things am I doing?
Yep.
Right?
Yep.
So yeah, it is you against yourself. That's what this whole really that's what this is. People
Yep.
like to think it's you against the market, but it's
Mhm.
really you against yourself.
Yeah, we are the ones who will make the decisions. We are the ones who can make the bad decisions. I am the one who can put on half of my portfolio into something stupid and blow up half of my account in a minute. That's the stuff that I think traders watching or getting on your page and trying to talk to you, and they're subscribing to your stuff and they're trying to follow you. That's what you're really trying to get in there, is that, hey, I'm teaching you the actual secrets of trading. The actual secrets of trading aren't the guy who's going to tell you how great the market's doing, or this fundamental data is coming out, or check out all this news. I'm just going to put out news flow all the time. The real secrets to trading are exactly what you've laid out here.
At least how I
Understand.
see them, you know what I mean? At least how
Yep.
I look at them. And it's not just me that says this stuff. It's all in
Everybody.
the market wizards
Yep.
books. It's all right there, right? And
Every
I
market
get it.
wizards book,
I read the
everybody
market
does.
wizards book the first day I started trading. Does
Hmm.
that mean I started listening and trading right from the beginning? No, I went 10 years without making any money, right?
Yep.
I had to learn it for myself. People have to learn it from themselves. I'm
Hmm.
hoping that I can pass my experience on to people to help them accelerate their learning curve.
Yep.
Some will,
Hmm.
some won't.
Yeah.
That, that's just reality. Me, I'm one of the people that had to learn for myself. So
Yep.
I'm just as guilty as those other people. But yeah, that's what it is. You have all
Mhm.
these services where like, oh, 90% of our trades, are profitable.
I
Right.
said seeing that, I'm just
And
laugh.
people sign up for them.
Yeah.
Um, but that's not the question. Even if it's true, like you
Hmm.
said before,
Hmm. Doesn't matter.
but do you make money?
Yep.
Because if you make money on 90% of your trades, and the
Mhm.
10% of your trades you lose, 80% every time, it's not going to make a difference. You're going to
Yep.
lose money, right? And A, we know it's not true anyway that they're making money on 90% of their trades.
Yeah.
One guy who will go unnamed, but some of the people on my Discord have come over from him. They
Mhm.
joined the service because the guy does a great job of hyping and all that. And
Yeah.
so 90% of the trades. And what he does is he just, which you could never do with real money, but he martingales it. So he buys
Mhm.
a stock at 50, buys more at 40, buys more
Yep.
at 30, buys more at 20, buys more at 10, and then it goes
Mhm.
back to 20 and he gets out and he made $1.
Yep.
Okay, so now,
Yay.
but you never could have done that because you would have been broke by then. You know what I mean?
Yeah.
So like, sure, 90% of your trades make money, but
Mhm.
it can't be done,
That's
right?
because you're not letting them lose money. Like that's a
Right.
difference there. You're
Right.
you're pretending they're
And
making
wouldn't
money.
you? And you can do that if you have unlimited amounts of capital, which nobody
Mhm.
does. As you bought this stock at 50 and kept buying it all the way down to 10, you could have been using that capital somewhere else to actually make money, right?
Yeah.
So there's that. Um, but there's the whole, it's very sizzle versus steak thing. I always say
Mhm.
to people, we're trying to sell steak here, right? So go out, buy the sizzle,
Mhm.
go subscribe to these people because you're not going to believe me. Okay.
Mhm.
So go subscribe to these people, see how it does. And when it doesn't do well and when it doesn't lose money, then come back to us. Hopefully you
Mhm.
still have money left. Come to us and hopefully I can help you learn how to do this.
Yes. No, that's perfect. I mean, like you said about the market wizards thing, I read them too. And I would go, I remember when I first started, I would go to traders and I'd be like, hey, tell me the secrets, tell me, and I wouldn't say tell me the secrets. It'd be like, hey, what do you do? What are you doing here? Are you buying this today? What does this look like? Like, oh, check out my chart patterns. Like, it's just dumb shit over and over again to these people. And they would send me like, I'd be like, oh, what book should I read? And they would be like, oh, this book, Van Tharp's position sizing. And I'd be like, what the fuck is this? What can I do with this? I don't know anything to buy with this. And I've just kept sitting it on a shelf and like doing that over and over again. And then I was finally like, maybe I'll read this book. And that was the secrets. Position sizing is the secret. Risk management is the secret. Discipline is the secret. That's the thing you see over and over again in all of Market Wizards. Every
But
single person.
nobody wants to hear that. That's too hard. I don't
It's
want to know
and it's
about that. I don't
boring.
want to know about that
Yeah.
crap. I want to know about what's the secret to figuring out if something's going to go up or down.
Yeah.
There isn't one.
Nope.
The secret is, like you say, risk management, position sizing, so that you stick around long enough to get lucky that one of your things that you bet went up or down, right?
Yes.
That's the
That's
secret.
it.
And nobody wants to hear that, but they want to hear like, oh, that you're a market wizard, you must know something else. I go, I'm a market wizard because that's all I know. Okay.
Yes.
That's what you got to
Yes.
understand.
A market wizard because that's all I know. Perfect. Well, you know what? We got, I actually, that's going to cut out in a sec. We'll end it on that. That was
All
perfect.
right, cool.
All right, Jay. Thank you so much for coming on here, man. It's
Yeah,
been an absolute blast talking to you. It's
great
very,
talking to you, Ken.
very fun, man. And love your work, love what you do, and
Thanks.
thanks for coming on.
All right, thanks, man.